Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. Today we're going to look at the charts of all the major sectors. We've got big time bull earnings reactions in the tech sector, and that's enough to continue shaping up weekly bull flags. We'll check in on the probabilities that we're headed higher.
So quick summary of the week. We pretty much started the week with all major sectors starting weekly consolidation. We finally saw the financial sector and the healthcare sector pulling back. Big tech was pulling back. And then we had bullish reactions on Tuesday afternoon to Google and Microsoft earnings. We then had bullish reaction to Meta earnings yesterday afternoon. And now we've got a bullish reaction to Amazon earnings. So it's essentially big tech is single-handedly saving the bulls right now. And we have weekly bull flags on the table. And after a day like today, which was a full bull control trending day, it's now the burden back on bears to prove to us that they are not weekly bull flags. To me, they are weekly bull flags unless we see proven otherwise. And today was the kind of day where you had all major sectors hitting the high of the day at the same time. We'll check in. We'll look at it right now. QQQ. So here is a key morning tone setter. QQQ high of Tuesday, 314.97. High of yesterday, we failed to break it by 3 pennies. Double top. We then opened above it because of Meta's earnings reaction. So we have a gap up open. How do we know that bulls are going to keep control? Now, we can't look at this and say it's going to be a trending bull day the entire day. But look at that previous resistance, 315, and now this morning, first thing, hold it, hold it, hold it, hold it. We tested it many times in the first 30 minutes of trading, and that is essentially the test. Who's going to control the morning? And the bulls win that test, and they then controlled the entirety of the rest of the day, just grinding 5-minute EMA 12 support. We didn't lose the 5-minute uptrend nor 5-minute EMA 12 support at any point in the day aside from maybe the last 30 minutes of trading as people took a little bit of profit into Amazon earnings reaction. So again, that's a clue for bull control. We can't say it's only going to be bulls today, but that is, again, it's the tone setter. Bulls won the morning with that little 30-minute battle, and then they kept it for the rest of the day from there. So at this point, the S&P 500, we're due for hourly consolidation. We can say that much. We went straight up from the lows of yesterday to where we stand right now, and obviously that is extended. We have just gone, essentially, including after hours, over 2% on SPY with no hourly consolidation. So what we need to see here is hourly pullback for a higher low. But I'm on team bull. And as I mentioned before earnings, if we didn't have earnings coming up, I would be bullish. And then I had to take a stance of, well, I have no idea what the earnings reactions are going to be, so I have to be cautious because of that. But my simple statement now is we have a clear level to go off of. And the simple statement is, if this low holds of 403.78, it's a bull flag. The only way that it's not going to be a bull flag is if the bears are able to break that level. And from where we stand right now on SPY is at 413 after hours. So SPY needs less than 1% for a bull break to get to the highest level that we've seen in 8 months of trading. And bears would need to see a drop of $9, so about a little over 2%. So we're much closer to resistance than we are to the recent low. And we're going to be looking for, again, an hourly pullback for a higher low. Even on the daily, if we were to consolidate on the daily, we're going to watch for a higher low. Because what this does, again, is if I want to be an aggressive bull, say, oh, well, I don't have as much of a position as I want right now. Next daily consolidation, I'm entering bullish positions and then just using that level as my stop. And if it holds, it's a bull flag. And if it breaks, then I stop out with that acceptable loss. And that tells us, no, it's not a bull flag. We failed. But it's the psychology of a cup and handle pattern. Remember, a cup and handle, number one, it's a rare pattern, absolutely. Number two, it's a continuation pattern. The right side of the cup has to be lower than the left. And this isn't much of a cup because it was a fast dip, but for me, the psychology of the pattern is there. We hit a resistance level. We consolidated significantly. We found a bottom. We failed resistance, and now it's a potential bull flag. So what that does is it establishes bears playing off of this level to top fish, and definitely know plenty of bears that did that, and it worked out on that initial rejection. And then you have bulls buying the dip on the consolidation. And why the cup and handle is so forceful is you get a lot of people stopping out. You get the right side of the cup stopping out and the left side of the cup stopping out on the same move. If the bulls are able to break 416.72, we're looking at 426.37, and that is the highest level that we've seen in a year. So if SPY confirms a bull flag on the weekly time frame, there will be the potential to see 52-week highs. And again, that's very notable. So at this point, the only hope for the bears is to see significant retracement. And, we still have earnings to go. Let's just run through right now. So we've got Amazon reporting, and after hours, we're up at 117. So nothing massive, but bullish. Highest level that Amazon has seen in 6 months. I'm watching 121.32 as resistance. We had Microsoft earnings go bull. Highest level we've seen in a year in Microsoft. Weekly bull flag confirming. We had Meta go bull. Weekly bull flag confirming. Highest level today that Meta has seen in 16 months. Eventually, Meta's going to need monthly consolidation. We're now up almost 200% from that fear low. Very impressive V-shaped bounce. And again, another monthly. The long-term stair steps have just been going so well. We had a monthly stair step drop for 7 months, and the break of that, it's been all bull since then. So those are our bullish earnings reactions. Still to go. We have Apple earnings next week. Check Apple out. Apple just hit the highest level that we've seen in 6 months. And Apple is only not a whole lot away from the all-time high. Not a significant distance. And then we had Google earnings and pretty much a non-event, but a big green day today. So nothing massive with Google. Definitely a wall of resistance in the 108s and 109s being tested again. And who else is left? We already had Netflix. So there's obviously other names left, but these are the major names that I'm watching, and we'll just be looking towards Apple from here. And we got the FOMC next Wednesday, which is obviously going to be meaningful in the short term as well. But we're back to the bears needing help. They had a little 2-day span of finally getting momentum in their favor, but very short-lived. Today erased that and then some. So again, back to my bull lean personally, unless bears give me a reason. And I'm definitely wishy-washy this year, but again, that agility and that refraining from attaching to a direction or a narrative has been serving me well. So I'm just going to keep doing it, and we'll look for QQQ to try and confirm the weekly bull flag as well. After hours, QQQ confirmed the weekly bull flag. We got up over 322, the highest level that QQQ has seen in a long time, 6+ months, was hit in extended hours. Now the futures didn't quite get the bull break. Just barely. But again, we're due for hourly consolidation. We're extremely overextended. So not surprising if we don't follow through. We need to see a healthy hourly high or low. But just like that, QQQ is trying to take the lead again. So what we had, again, just review, the last month of trading was QQQ sideways and consolidating. QQQ, the weaker sector over the last couple of weeks. The financial sector and the healthcare sector kept going up and kept dragging SPY with it. Then those sectors started their weekly consolidation this week. And now we have the tech sector and the NASDAQ bulls making their turn. It's rotation. It's just, you hear me talking about rotation so much, but this is a perfect example. And yes, it is the earnings reactions that are the reason for it, but bulls don't care what the reason for it is. It is healthy bullish rotation as long as this keeps going on. Semiconductors trying to get a daily bounce going. Again, still extremely weak. If you go to SMH divided by QQQ, you can see we are the weakest that we have been compared to the NASDAQ. The semiconductors are the weakest that they have been pretty much all year. So keeping an eye on that, it is definitely a notable shift. We're going to look for a weekly high or low in the semiconductors, and they're trying to shape it up. But we'll be watching this uptrending support line. Actually, you know what? We already lost that. Take that back. Just going to be watching the higher lows. And yes, it is a potential head and shoulders. If we do see market weakness sometime in the next couple of weeks, I will be looking at the semiconductors to be a lead bear, but still a weekly uptrend at this point, and certainly benefiting from the NASDAQ heading up to the highs. Tesla, daily bounce trying to get underway here. Gap down open. So what did we not see at any point from the earnings reaction. We gapped down on the earnings reaction, and then it was full bear control, but no gap downs. You will often see this. If you're seeing a bull move up and there's some gaps at the start of it, and then you have continuation and it's just stair step and no gaps, you look for the gap up to mark that top. And the same thing with the bears. If it's a big drop and there's no gaps, watch for the gap to potentially lead to a climax. Big bounce on the hourly, no uptrend yet. We will have to confirm an hourly trend change for the daily bounce to get follow through. So bulls that missed this move today are scouting hourly high or low entries. Then we're going to zoom out. We know a daily lower high is the most likely result of the next bounce. So Tesla bulls have a lot of work to do, but certainly showing up today after, I mean, this is the first time they've showed up in the last almost 2 weeks of trading in any meaningful way. So a lot of space for an hourly high or low on Tesla. XLV, simple statement. If we hold weekly EMA 12, it's a weekly bull flag. So a lot more work to do here. And we're just looking at anything under 135.26 as a daily lower high. We're in a downtrend. Bears want to keep that downtrend going. Need to see an hourly trend change to the bulls. Confirm the hourly trend change. Daily bounce is underway. And we then watch that daily resistance. Financial sector, daily bounce underway. Anything under 33.32, just a daily lower high. Same thing. Well, not with the EMA, but we are watching for a weekly high or low to try and shape up. It would happen, you know, I'm not holding my breath that it's going to happen that quickly for the financial sector, but we could see a scenario where maybe the financial sector and the healthcare sector now take their sideways trading turn and the NASDAQ bulls take over a bit. It all depends on the key resistance tests. And again, we don't have to break them tomorrow. We don't have to break them Monday. The bulls have given themselves a lot of space to work with. Maybe SPY rejects from 415.72, pulls back for a couple days, sets a higher low, and then we head into the FOMC. And then the FOMC is going to dictate whether it's a weekly bull flag that confirms or a bear break to fresh consolidation lows, negating that weekly bear flag. But again, we have, you know, three more trading days to go. But if the FOMC were tomorrow, it would be the bears that would need help. BABA, sideways, daily bounce trying to get underway. I'm watching BABA for a weekly higher low to try and form compared to 79.48. I'm still in a small swing position here from the bounce attempt on Tuesday. Up after hours with the Amazon earnings reaction. But I need to see a bull break of 85.22 and 85.70 during regular trading hours for this daily bounce to clearly be underway. And then we just look for a daily lower high. We need a big enough bounce to create the space, to change the trend, set the weekly high or low. It takes a while for the bulls to reverse momentum and trends, but I'm sitting there with a stop under 180 or under 82, risk-free, and giving the bulls a chance. IWM, daily bounce underway. Anything under 178.45 is just a daily lower high. Hourly has to confirm an uptrend still, has not happened yet. Little double bottom with the low of yesterday. Another name that has a base of support that I'm keeping an eye on, Coin. Coin has been a relative bear consistently, but we do have a triple bottom. 53.62, 53.60, 53.58. And I didn't trade a whole lot today, but one trade I took this morning was looking short on Coin down here. I was looking for a break of the low of yesterday. And I recognized a shift in correlation, and I recognized a bullish correlation start to form. So I stopped out my short break even and flipped to the long and sold it in the low 55s, entered it maybe 54 or so. But I was proud of that one just because I don't often flip into the completely opposite direction that quickly. I did it with ARKK as a swing trade, as that took a lot longer to play out. But generally, if I'm looking in a certain direction for a certain trade and it fails, I just stop out and move on to something else. But certainly want to get better at just looking in the complete opposite direction of that same name. And the reason I did it here is because, all right, I took a short in case that double bottom broke for bear follow through. It didn't, it held, so then tried the long because that support was right there. XBI, still pulling back on the daily, clear hourly downtrend. So no sign of the bulls regaining strength, but we will be looking for a weekly higher low here as well. but still a weaker sector today. Actually, the only red sector on my screen today. Checking in on the crypto names, Bitcoin completely recovered. So Bitcoin dumped yesterday due to a false signal. There was a wallet that, there's a signal that people are looking for the government or Mt. Gox coins to potentially enter the market and for supply to increase. And there was a false alarm yesterday. So really cool to see the market able to completely recover right back to where we were before the false alarm. And these crypto stocks trying to recover as well, not as strong, but Bitcoin's a weekly bull flag unless the bears prove otherwise. So a lot of healthy weekly consolidation out there right now. It's got to be the FOMC big bear reaction to spoil the current setup for the bulls. Gold, sideways, nothing going on. It's trying for a weekly bull flag, but remains to be seen. Silver, same thing. Sideways for the most part, healthy weekly bull flag trying to form. FOMC we know is going to have a big impact on the dollar and the metals. The dollar is still holding its base of support. Market bulls would love to see those fresh lows. But again, FOMC, 3.5 trading days away. And that is going to have significant implications on all of these weekly bull flag attempts. Oil. Daily inside bar, not much going on today for oil. Trying to put a stop to the drop and doing so temporarily. A lot of space for a daily lower high, anything under 79.18 next bounce. We're watching oil for a weekly higher low, but it's not a bull flag setup because the retracement is closer to 50% rather than the ideal 382. And we got natural gas. Bear break on the daily with zero follow through. I like this 4-hour as a guide. 4-hour downtrending support line with a bunch of touches, downtrending resistance line with a bunch of touches, and that coming into play again here. So I may make it, if we see a pullback back to this downtrending support line, I may go long natural gas to play this falling wedge. Remains to be seen. I would probably do it through a futures account so that I can stop out in the middle of the night if we do get a big drop. But I would want to see a pullback first. If we just break bull from here, it's not going to be an ideal setup for me. So burden on bears. And again, just very open. Really what I'm basing everything on, aside from the day-to-day information that we get, is my 4-month bigger picture thesis. I got to talk about cannabis. We'll talk about cannabis in just a second. The 4-month bigger picture thesis of all these things where, I'm looking for the dollar to give us a 4-month higher low eventually. I've mentioned this recently, but plenty of space for it. I'm looking for the NASDAQ to give us a 4-month lower high eventually. That resistance level is over 20% away, 25% away. And I'm looking for a bunch of other names. Same thing. Look at Meta. Meta's all bulls. Yeah, but a 4-month lower high is coming. I would be shocked if it didn't. With the size of the drop that we saw, you scout an equilibrium when you get that kind of dump and that kind of retracement. I'm watching Bitcoin for another leg up, but I'm watching it for a 4-month lower high eventually. So I do believe there will be a time for the bears again to have, a couple months of control, but not sure it's just yet. We might get another solid leg up first. And so I'm going to keep checking in on these longer term time frames, but being a day trader, it's certainly day to day that I'm caring more about in the short term. So cannabis keeps having this headline coming around of the SAFE Act, and it keeps getting sold into because people don't believe it at this point. It's the boy that cried wolf. And, to see this kind of gap up in this kind of downtrend, it's such an easy short. And I have a problem where I struggle shorting this sector because I know so many friends that look long in this sector and are bag holding and are down. It feels like I'm a bad person if I'm shorting it, but it's such an easy short on this gap up play. Think about it. Like, the only people who know about this news are people that are following this sector. The only people that are following this sector are either bag holders or, they're probably bag holders. And they've been using up their capital already. It's not like, I'm not speaking for everybody, of course, but it's not like, people have money on the sidelines and they're waiting to jump in. Some do, but the majority certainly not. So this headline is not national news. If you get someone saying, we're rescheduling cannabis. That's national news. A ton of new money will flow into the sector. But this kind of news, look how easy the bears have it. You gap up, short the gap up open, lower high, lower high. And it's just, that sets the tone for the entire day, the first 45 minutes. You've got a pullback, a 5-minute downtrend confirmed, and from that point forward, it's just all consolidation. There was a lot of volume behind it, but again, you're in a downtrend on every time frame. And if I'm a bear, I want it to open as high as possible to get the better entry to reshort it. So, you know, I've said it many times, and I'll say it again. I'm going to make a lot of money in this sector again, just not yet. When there is the right catalyst and momentum and trends and volume, I will be aggressive in this sector. And, you know, the lower we start before that happens, the better the gains will be. But you've got to confirm trends to put pressure on bears. If you gap up open and consolidate and then hit a new high, anybody that just shorted the open is now underwater. And them covering adds to the buying pressure. Shorts being wrong. No short that entered in the first 30 minutes of trading had any kind of significant pressure to cover their positions at any point today. So they just add if they want to or sit in those positions, and you have to force the shorts to cover because they are trained in this sector to short any pop. And that has been the right play. And so here we go again. So now we have a new key resistance level. It's all about 604. Bulls do not, the previous level was 736 and we couldn't get over it. So we rolled over into a big drop. And now it's the same thing at 604. Simple statement. If we do not get over 604, the bulls aren't going anywhere. That's our new benchmark level. And the bulls have a ton of work to do. Headlines are nice. You have to have sustained buying and put pressure on shorts if there's going to be any kind of significant trend changes. It'll happen eventually, but we don't know when that will be. All right, appreciate you watching. Do good things. Hope you have a great Thursday. Lori's about to go live with her webinar on finding your trading edge. There's a link in the comments of this video if you want the recording sent to your email. Appreciate you watching. See you soon.